Yeah, absolutely. I mean, what we look at is all the same metrics that you look at, inflation, right? All of the kind of macroeconomic metrics. What we've actually seen, if you look at the history of gaming over the last 20 years, it tends to be very resilient through economic downturns, through recessionary periods. Doesn't mean it's completely out of the woods, but it's very resilient through those periods. I can tell you when you look at North America, we actually haven't seen any real change in consumer behavior and consumer spend. You would have seen a lot of our casino customers report earnings for the March quarter, very strong earnings. You would have heard the verbiage they talked about, very bullish on a go-forward basis. And even me being here in Asia at G2E Asia, we see customer engagement, we see the willingness and the ability to invest. And that's the reality. What we saw through the COVID period is companies that invested through the downturn actually came back significantly stronger. Those that actually cut and made significant cuts are now kind of lagging behind those that were able to lean in.
Now, I've got to ask you in that respect as well, what are you seeing in terms of the differential between the performance in North America and the rest of the world? Is Asia going to be the big growth driver for you moving forward when it comes to gaming and Aristocrat?
Yeah, there's a reason I'm here, right, in Singapore, and we look at the Asia business as tremendous growth opportunity. If you look at the Philippines and here in Singapore, the global gaming revenue, the GGR, compared to 2019 pre-COVID levels, is actually above. And then if you look at even Macau, right, where it's obviously had some ups and downs over the last couple of years, we started to see early signs of recovery. The early signs of very much...
What's an average number there in terms of what the revenue growth has been like pre-pandemic and now post-pandemic?
It's still not quite, I'll give you some metrics. It's still not quite to pre-2019 levels. But I just read this morning, in April, they had over 1 million visitors and hotel occupancy was north of 80%. And so clearly you're starting to see the rebound. And as we look at what we experienced through North America, there's a lot of similarities that we're seeing. And here's why. Through COVID, through lockdown periods, people kind of missed out on live experiences, the ability to go somewhere and have a social interaction. And what we saw is that as the world opened back up, humans just really crave that live experience and that ability to have fun and disconnect, if you will. And so that's the phenomenon we're seeing. And I truly believe that Asia will follow that same phenomenon.
It's interesting, when you analyze the Chinese consumer, they're spending on travel.
Sure.
They're spending on gaming.
Sure.
Right? They travel, leisure, stroke, right? Tourism. But overall, the overall spending figures are slowing down. How do you kind of reconcile that? Have you analyzed that?
Yeah, we absolutely look at overall spending trends. And the reality is it's this phenomenon that I talked about of being locked down for 2 years and really evaluating how live experiences and live entertainment fits into your daily life. One of the phenomenons we've seen is the wallets are bigger. And so as consumers do come back and engage in gaming, the overall wallet has grown. And I think that's really as a result of that kind of period where they weren't able to engage.